world of consumer finance. Let's talk about how things are and the tools and things like that. Are things going well, or what's the temperature right now?
The consumer is resilient. They are strong. And at this point in time, we think that we're in a point of, relative stability. With that being said, from a consumer perspective, the area that we're really focused on is being able to meet the consumer where they are.
Welcome to the Independent Thinking Podcast. This is your host, Rob Stotts. We are kicking off another season of the Independent Thinking Podcast and getting to do so with a great financial partner of ours in Synchrony Financial and Mr. Dave Marsh, general manager over there, who manages the nationwide marketing group relationship and has been integral in building some really awesome programs, both on the financial side and education side for our members here at Nationwide. Getting things rolling in the financial space, and whether that's consumer financing and the business that Synchrony has really established itself as a strong partner for Nationwide, and Dave kind of at the forefront of that and a pillar of that. So appreciate him taking the time and jumping into it with us, and got a lot to discuss as we set up the new year and look ahead at what 2025 has in store for the channel and what Synchrony's seeing, and obviously the learnings from the end of last year and how things wrapped up to finally putting the craziness that is 2024 behind us, and looking ahead, and we don't even have to look that far ahead for some of the exciting ventures that Synchrony's been working on with Nationwide, and we could look to March in our primetime show, and we do a little bit of preview, and I don't want to give away all the secret sauce and what we discuss, but Dave shares some insights on what's to come at primetime, and a really cool presentation they've got planned, and in addition to some of the Nationwide Learning Academy sessions that are going on. So just a lot of great information. Anytime we sit down with Synchrony and dive into the channel and what they've got going on, it's always eye-opening for me. So I only can assume that it's the same for our members as well. And so I wanted to have them on the podcast, and I think it's a great way to start the year off and dive into another round of these conversations. So appreciate Dave taking that time, and let's dive into it. This is Dave Marsh of Synchrony here on the Independent Thinking Podcast.
All right, we are back on the Independent Thinking Podcast, and excited to kick the year off with a great partner of ours in Synchrony Financial, Mr. Dave Marsh, the general manager for the Nationwide relationship. Sir, how are you? How's it's weird. We're like before the new year, but we're talking about the new year, and this is going to publish in the new year, so it's like we're planning ahead. This is ultimate planning ahead. Great for within the financial world, right? That's all you guys do.
It is, and it's a great time of the year. We're looking at how 24 is wrapping up, but we've been heads down really over the last month or so, looking at 25. So this is great timing.
Good time to talk for sure. Well, you mentioned it. Looking at 24, I know it's a year. I think most of us want to put it in our rearview mirrors and move into 2025, but just to put a bow on the year and wrap things up, how did it ultimately end up as a year for our retailers and the industry?
Yeah, so I think from a retailer perspective, we're seeing a rerun, right, of what we saw in 23. So depending in the industry, right, we've got different verticals within Nationwide. Mattress and furniture, they had really, really tough years. But as you look into, appliances and consumer electronics, kind of more flat to slightly down. It was absolutely a challenging year. And I think that, a lot of the uncertainty that we had in 24 is that dust is starting to settle. We're seeing some green shoots, if you will, as we look Black Friday forward. So I think there's a little bit more optimism for 25, but still, I would say cautious optimism.
No, it's a good term for sure. And we say I just got done writing as we're sitting here too a blog about kind of the last couple of months of this year, and it does seem like, right, like we got out of something, and there's a lot of momentum heading into this next year.
There really is. Like I said, there was a lot of uncertainty. I also think that, as you think about the consumer, the consumer has gone through quite the wild ride over the last couple of years, right? So you think about, the early 2020 to kind of 22, beginning of 23, you've got a consumer that is flush with cash, and it's really all about just, trying to buy or acquire, get at the merchandise. But that has normalized considerably over the 23 and definitely into 24, where that savings rate has come down more to a traditional rate. And as a response to that, what we've seen in our business is the payment rate. So the rate at which consumers pay us back has come back to more normalized levels, which is good for us, right? It makes for a stickier asset. But it also has created a little bit of pressure from a delinquency perspective, right? So if you look across the U.S. consumer, the debt load has increased considerably, right? Savings rate has come down, and you would expect that delinquency to pop up, and we have seen that. However, the consumer is extremely resilient, and our delinquency rates are at a rate that is very sustainable at this point. So that again creates a little bit of optimism as we move into 25, and definitely as we hopefully finally put this period behind us. As we look forward even further, 26, I think, across the board there is tremendous optimism.
Yeah, for sure. And you mentioned a little bit about 25. So before we get too far
Yeah.
ahead of ourselves, what are
Yes.
those things that you are looking for, or sort of the key indicators for what, how you project the year ahead will go in terms of, the industry?
Yeah, so a lot of what we take is macroeconomic data, but we also listen to our partners, right? So when I say partners, it is the manufacturers, those that provide the product that we sell within our ecosystem, right? That provides the inventory to our members. And we really listen to how they're creating their production schedules, what they're expecting, what the product mix is going to look like. There is different levels, right, of optimism and pessimism across the different verticals. What I would say is, as that is the key input, again, folks are feeling at least the first half of 25 will be kind of flat to down, but then we'll start to see that increase in consumer purchasing
Sure.
in that back half of 25, to where we start to move to a slightly positive year-over-year view.
Yeah, I know we hear a lot, and it may be recency bias just watching the news this morning with my coffee, but like
Yeah.
the things you hear about, well, I should say the thing you hear about most often in this space is the Fed, right, and the interest rate
Yes.
and kind of the expectations for what they'll do. I know they got a little hampered this week. I think they said they weren't going to cut as much as they said they were, or something like that in
Yep.
20. Like, how big of is that? That seems to be, in terms of like the coverage, the only thing that gets talked about. But obviously, there's a lot more to it than just that.
Yeah, there is. Look,
Yeah.
there's a lot of data points that come in, and at the end of the day, the consumer, right, they take in those data points, and what my take is, they really just want to have a consistent, more positive stream of
Yeah.
data coming in and information coming in. Um, the Fed is one piece of that. If you really look at the key drivers in kind of the home space, right, whether it be appliances, furniture, um, there is a tremendous amount of untapped equity. If you think about,
Yeah.
interest rates and how that is really impacting the consumer, it's really looking at mortgage rates specifically, right? So mortgage rates are now more at kind of the traditional, 7 to 6.5%. And there is a tremendous amount of homeowners that own their home outright, but then also are locked into rates that are around 2.5, 3%. So there needs to be, exactly,
Yeah,
right?
that's
There's a lot of
right.
us
Yeah.
there, right? So there needs to be a fundamental change in more of the mortgage
Yeah.
industry, as it relates to people wanting to move and to shift to a different household.
Right.
At this point in time, it is a hurdle right? To say, well,
Hmm.
why would I want to leave what I have, potentially move into something that is at par or maybe less, and it become more expensive?
Yeah.
So that needs to right size. And as that happens, that's where we'll see a return to purchasing big ticket
Right.
home specific items. And I'm talking, the furniture,
Hmm.
mattresses, appliances, and those types of things that our members are
Yeah.
exceptionally, tied
The,
to.
the other interesting thing too, and I just bumped into a colleague of yours at the Furniture Today leadership conference
Yeah.
down in Florida. I remember he was talking on a panel, kind of looking ahead. There's an influx of, we were looking at like the average age of the home first time home buyers and kind of where they are, and I think it's crept up a little bit. It's like 35 to 38 is like average age of that first time
Yep.
home buyer. There is a massive right behind that age. There's like a massive generational sort of wave, if you will, of people that are right on the cusp of being those first time home buyers. So I have to imagine too that probably influenced. You talk about 26, even a couple years out, the possibilities that are there for what this industry could go through.
Right. And I think that ties to what we're seeing, right? I think that
Yeah.
that is a a portion of the population that, all things being equal, if they had the rate environment that,
Right.
again, that we were able to take advantage of, they would have come into the market and started to participate in those larger ticket,
Yeah.
purchases. So that's what I'm talking about,
Yeah.
is there is that big population. And as the rate environment becomes favorable to where inventory can tick up, uh, you know, uh, and housing that, existing homes that can start to turn, that's where we'll start to see more volume in those big ticket home purchases.
Yeah. It's like one of those we've bared the brunt of it. It's like if you could just,
Yes,
the light is there. It's just,
it
stay the course kind of thing. And it seems like there's a lot of opportunity ahead, which is awesome to hear.
absolutely,
Uh,
absolutely.
So honing in a little bit more, the world
Yep.
of consumer finance. Let's talk about how things are and the tools and things like that. You mentioned the delinquency and people are using credit more, but from which I good in your point of view, people are using credit, which is great. So are things going well, or what's the temperature right now?
Yeah, I would say across the board, delinquencies I would say more normalized, right?
Sure.
Because again, when we were flush with cash, those payment rates were artificially accelerated, and we've returned more to that normal payback rate. So
Hmm.
the consumer is resilient, they are strong, and at this point in time, again, all things being equal, we'll see how they play out. We're not expecting any drastic, decrease. We think that we're in a point of, relative stability. Um, with that being said, from a consumer perspective, the area that we're really focused on is being able to meet the consumer where they are, right? And I think we hear that a lot. And I want to provide some color into the way that we think about what that means, right? So the consumer at this point in time, they're generally looking big ticket purchases online, or in some form or fashion, doing some investigation, several weeks before they actually intend to purchase. So that could be 60, 45 days, again, depending on the vertical. And they're looking online to see what is available. Now, when I say meet the customer where they are, where credit plays a part in that is making sure that that digital experience, right, allows for the customer to understand and know a couple of things as they're engaging with a specific merchant. One, they want to know whether or not that merchant has financing options.
Yep.
And if that is just part of the entry level experience, hey, I see that this merchant has financing. That is a big part, because at that point in time, those that are looking for financing, if they don't see it, they'll immediately move on.
Yeah.
Those that are looking for it, they see it, they continue with the process as they're looking at specific items, right?
Mhm.
This is where we're getting and pulling forward I would say the credit introduction into the sales cycle, we have capacity and digital tools where as the customer is looking at those specific items, it will show them, hey, this item that you're looking at could be yours for as little as, and then we convert it to a monthly payment.
Yeah.
Monthly payments are exceptionally important because it allows that customer to say, oh, okay, I can definitely do this. This is, it's put in terms that they can look at and have context.
Yeah.
Looking at whole ticket price can be
Right.
overwhelming.
Like how much more is it than my Netflix subscription kind of deal, right? Like,
Exactly.
it's
How
crazy.
many visits to Starbucks is
Yeah.
this, right?
Yep.
And it becomes much more, you know, it becomes something they can understand
Yeah.
and not as
Accessible
fearful because
even, right?
it
Yeah.
is.
Yeah.
It's accessible and simple. Everybody likes simple.
Yep.
From there, what we're focusing on is, okay, the customer understands that there is financing available. They understand, hey, I can get what I'm looking for at X dollars per month. Uh, we're creating a customer experience where it's exceptionally easy for them to see, hey, do I qualify?
Yep.
Right? So we're looking at it from two sides of the coin. There are customers that are high credit quality folks. They have multiple options to pay.
Mhm.
They can pay cash. They can use their American Express. Um, and on the flip side, we've got those that are on the margin and they're worried, hey, I don't know if I'm going to qualify. I know that my credit score is right there on the edge. I'm looking for a way to see if I'm
Right.
able to get the
Yep.
credit line without impacting my credit score.
Right.
So what we're doing is taking a very simple entry point where a customer can see, what do I qualify for? Those high credit quality, they want simple. They
Yeah.
know, hey, I'm getting $15,000, whatever the case may be. I know that I'm qualified, and that can create, the higher credit quality customer entry into the financing options.
Right.
Conversely, from a pre-qualification standpoint, those that are on the margin, they can see, hey, I qualify for $5,000, or in the event that they don't, then they were able to find out that information without any
Yeah.
negative impact to their credit score, which is huge.
Right. I huge from a credit standpoint, also huge from like I feel like that customer experience standpoint of not having to the embarrassment of talking to someone, right? And like forgetting
Yep.
that sort of information. But if they are approved too, though, that then I have to imagine kind of flips the script too, because then they know, hey, I have this amount of money. Maybe I was looking at washer A, the entry level, and all of a sudden now I realize I have more available to me. Maybe I do step it up to a more expensive model.
And that's the benefit.
Yeah.
You nailed it. And that's what we're seeing with those that are employing this customer experience or this digital experience that we
Yeah.
provide. We call it Unify, but it's simply providing that customer with, hey, this is what the monthly payment is,
Hmm.
and this is your pre-qualification. And I'll talk a little bit later about kind of
Yeah.
the checkout process and options available there. But once somebody sees what they have access to, the percentage of customers that actually go to a higher ticket is substantial. And that benefits the customer because they actually get what they want. They don't have
Hmm.
buyer's remorse 2, 3 months later. Obviously, the merchant having the higher
Yeah.
ticket, very happy. And then you and I, Nationwide and Synchrony as providers, able to, to achieve that with the
Yeah.
merchant and the customer. It's a win across the board.
For sure. Now, as far as getting involved with something like this, what's the threshold for a dealer? What's required of them to start taking advantage of a program like this?
Yeah, I would say as it relates to connectivity with Nationwide and One Shop specifically, we've been working with them the latter part of Q4. We have gone through a lot of work such that those that are converting over from a legacy platform to One Shop, adding this unified capability is exceptionally easy. And it's really just simply stating, hey, I'm converting over from, whatever the legacy
Right.
platform is that they're on to one shop, and we can run those. We do not have bandwidth issues as it relates to, implementing that functionality in the one shop environment.
That sounds pretty easy.
Yeah,
It's like,
it
hey, I want
is.
to do this.
Yes, that's exactly
Check a
right.
box. No, that's awesome. I know it's not the only tool available out there too, right? There's you kind of I think maybe started to allude to it, but there's other financing tools. I know we're hearing a lot, especially recently, about things like waterfall programs and things like what other tools
Yeah.
are out there that could help in this space.
Yeah. And I think a lot of it goes to, from a merchant perspective, you want to put your customer in a position where they're going to receive some sort of an offer, right? Um, Look, we're a regulated bank, and we have a set risk appetite that we underwrite to, and that's the way that we are. That's the way that we're managed, and that's the way that we'll continue to move forward. Now, what these waterfall capabilities, as you stated, what they do in essence is, as a customer, I come in, and let's say I am not able to pre-qualify and get aligned with Synchrony. As a merchant, then I can determine, hey, I want to take that customer and I want to allow them to be potentially underwritten by a Fortiva. So Fortiva is a vendor that both Synchrony and Nationwide utilizes as a second source.
Mhm.
So they have an option to look at that customer and determine whether or not they want to provide a credit line for that customer. And if they, are unable to underwrite that customer, then there is a third option. And there are multiple partners that both Synchrony and Nationwide have, whether it be AFF or
Right.
Progressive,
Yep.
that are more in the lease to own space, that they will take on that customer and allow them to make that purchase. So these waterfall capabilities, we've implemented literally hundreds of those across 2024 with the various merchants in Nationwide. And it allows for that merchant, and more specifically that sales associate, the confidence that when a customer engages with financing, that there will very, very likely be some sort of offer at the end of that process. And
Yeah.
that's been very successful for us in 24.
No, that's awesome. And I know you've already alluded to it too in terms of just the benefit of having it. I think when most people think of financing, they think of that in-store experience, right? Of like it's
Mhm.
something that is visible at the point of sale or, throughout the store on signage and things like that. But I know I want to let you talk about it now, the web experience of that,
Yeah.
and the importance there. Talk about that a little bit.
Yeah, what I would say is consumers want to see a consistent experience as they engage with the merchant. And what I mean by that is, as they initially, which is very likely, engage with you in a digital platform, then that needs to be reflective and at the same level that you have in store.
Yeah.
So anytime there's a disjointed, approach, we see that there is abandonment. And so from a digital perspective, having choice, right? So one, creating the digital experience where a customer understands that, hey, as a merchant, I do have financing.
Hmm.
Two, what does that mean from an affordability standpoint? How much is it per month? What types of promotions do I provide to my customers? Um, those things are essential as that customer makes the choice. And in all likelihood, it's still a process where a consumer will engage online, come up with a very, a very completed idea of what they're going to purchase, and then complete the purchase in store.
Hmm.
So understanding that the customer has gone through a strong digital experience, and then as they come in store, having that same level of experience,
Yeah.
and then allowing for the sales associate to say, okay, I understand that you're looking at this basket of goods. You're pre-qualified for $10,000. You're looking at this specifically. That's really where it allows for a a deeper sales experience where they can get into
Yep.
the upsell, right? The bigger ticket, and then also leverage options and choices from a promo perspective to potentially get that customer with that bigger ticket.
Yeah, I can. You mentioned it, right? The abandonment. I can't imagine someone coming into the store and then having, those things not match or something. What like that? The feeling of like what, just what that does to the customer experience. So,
Right,
just the importance there of having that. I mean, we hear so much about omni-channel and what that truly means, but like,
right,
think about it. You got to put yourself in that customer's shoes, right? Of, if you had a certain expectation when you first met this retailer online or had that experience to how important it is to maintain it throughout. You have a certain level of expectations as a customer. If they get not met at any point, it could result in some not what you want. Not
it,
getting that sale.
and that's
Yeah,
especially true with our customer base because we're talking about
yeah,
multiple thousands of dollars, right?
right.
The average ticket is multiple thousands of dollars, and that requires a higher level of confidence and good feeling with the merchant to take that
Yeah,
transaction to completion.
definitely. I know you dive a lot deeper into some of this stuff too at our primetime shows, which I know we're coming up on. As
Yeah.
this publishes, we're just I don't even want to think about the number. We're closing in on 100 days away. It's getting close, but
Yes.
you'll be there in San Antonio. NLAs are a common thing for you at shows, right? So talk about those a little bit and the
Yeah.
that experience for you.
Yeah. So this last prime time in Las Vegas, we actually did two different shows. So one of the shows that we talked about were the digital tools,
Yeah.
a lot of kind of what we're talking about now,
Yep.
whether it be pre-qual and the impacts there, the Unify experience and how that allows for the customer to understand affordability, but
Mhm.
then also choices that are tied to that. Then we had a separate session that was very successful as it related to multi-source financing or
Mhm.
waterfall capabilities. And like I said, we did multiple hundreds of those integrations in 2024, where
Yeah.
if you came through our booth, then we would set you up with a pre-qual link that you could simply put either in your store or online. And then also we're able to get you in the queue from a waterfall perspective. And we saw tremendous success there, and we're able to implement, like I said, multiple hundreds
That's
there.
awesome. No, that's incredible. And I know too, I mean, we kind of touched on the surface about the impact of some of these things, the numbers you're able to share when you do have it. I'm not saying you didn't prepare for the podcast. That's not at all what I'm getting at, but
Yeah,
when you get a presentation and you can get, in front of these people and show the true impact and have the numbers there that
exactly.
like for a member that's offering waterfall versus one that's not and the opportunities there, it's an impressive thing to look at and understand just, the opportunity that these dealers have in front of them.
Absolutely.
So
Absolutely.
no, it's awesome. Well, Dave, this was great. I think a great dive to sort of set the year up right. For our dealers,
Yeah.
it's an important topic. One I know. We'll dive into more, of course, at prime time, but hopefully throughout the year with y'all. And it's good to be able to do it.
No, I appreciate it. Look,
Yeah.
it's been a tough but great 24. We're looking forward to putting that behind us
Yep.
and moving into 25. And you know, you have been a tremendous partner for us, and we're looking forward to serving and really growing with our respective members' businesses and their customer base.
That was awesome. Thank you so much, and we'll chat again soon for sure.
Okay, sounds good. Thank you.
Awesome. And thanks again to Dave for, like I said, taking that time and diving into the year with us ahead and previewing what's to come. And again, get us excited for prime time. San Antonio, obviously, a first-time stop, a new city for us, but more reasons to be excited about it than the city we'll be in. And Synchrony is a big part of that. And look forward to seeing what they bring to the show and that keynote as well. So looking forward to it. But appreciate Dave taking that time. And as always, appreciate you listening to the Independent Thinking Podcast. And we'll catch you next time.